Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage, and welcome to another edition of Java with Jared. Hope you guys are doing fantastic. Well, it's a clear, bright, sunshiny day. Wanted to do the Java with Jared here outside because also the reality is, things are looking pretty sunny for interest rates as well. Clear skies for, I think, what we're going to see is continued wonderful interest rates for the remainder of the summer for the home buying season. So we saw a lot of economic data here this week, a ton of stuff going on. So let's dive in and let you know what's happening. First of all, we saw pending home sales come in, and that showed an increase of about 3.4%, which was a pretty good number, especially considering we had seen some weakness in the previous numbers. So it's a nice rebound from the negative 0.5% of last month. Pending home sales are back up. Case-Shiller also came out with their index, and it showed an increase of about 12.9% for the year-over-year number. The month-over-month number was an increase of 0.8%. So it shows that appreciation is still happening at actually a pretty good clip at the 0.8% month-over-month number. That annualizes to 10%, but that's a little bit lower than the 12.9% year-over-year. So it shows that it's slowing, but it's still at a really good rate, and actually maybe a little bit of a slowdown is good because we don't want to see appreciation shoot through the roof and make things less affordable and have people stop buying houses. Slow, moderate growth is a really good thing. We also saw the weekly MBA release the statistics on new applications for purchases and refinances. Now that has showed quite a bit of a decline, and that continued. Now we see purchase applications down almost 25% versus the previous year. Refinance applications are down over 75%. So a huge decrease overall year over year with the amount of applications that are out there. And that is actually causing this quantitative easing that we've been seeing to really have not much of an effect. Speaking of quantitative easing, we saw the Federal Reserve meet. They had their board meeting. They came out, no real surprises on the notes, and as expected, they are decreasing again the amount of mortgage-backed securities and treasuries that they're buying. Started out at $85 billion. They've been decreasing it about $10 billion every month. We're now down to $45 billion. So what the Federal Reserve was trying to do is trying to provide liquidity to the market, suck up some of the demand or the supply out there of mortgage-backed securities and treasuries to keep interest rates low. When they said they were going to start announcing they're going to decrease that, concerns were interest rates were going to rise because there wasn't as much support. Well, with all these statistics that I've been talking to you about applications being down on refinances and purchases, reality is there's just less that they have to absorb. So that's, even though they're buying less mortgage-backed securities and treasuries, it's still keeping interest rates low just because there's less out there that they have to absorb. So that's good. We also saw the gross domestic product come out, GDP, and it should have been GDPU because it stunk. It was really bad. It showed only an increase of 0.1%. Expectations were for about 1.1%. So the quarterly number was really low, and that's way lower than what the Federal Reserve would like, so it's showing some weakness into the economy. Also saw the jobs report came out today that initially showed that it was actually a really strong number. It showed that 288,000 jobs were added to the economy. Expectations were only for 212. Showed also that the unemployment rate went down from 6.7 down to 6.3. So unemployment rate decreased. Interest rates initially got worse on that news, but when you really dive into these numbers, it's not a very good report. It actually showed that 800,000 jobs were really lost. The reason that the unemployment rate went down is because the labor force participation rate actually went to tied the worst level ever. It's showing at 62.7% of the people who could work are actually working. That's the worst number since 1978, actually tied an all-time low. So that does show that there is some weakness into the economy, even though these numbers on appearance didn't show that they were that bad. And so generally speaking, rates are better now than where they ended the week last week, and I think we'll continue to see some, slowing in this economy, some concern out there. Interest rates will remain great for the rest of the summer, so get out there and talk to your clients. Let them know now is a great time to buy, and let's make it a really good summer. That's all for Java with Jared. Hope you guys have a wonderful weekend. If you're working this weekend, so are we. Have a great weekend. Enjoy the weather, and if you have any questions, give us a call. Thanks a lot. Bye-bye.